10 amazing stock market facts that will blow your mind. You may be a keen investor, but there must be things you have not heard about the stock market. Do you know its history and some fascinating trends of stock market? If not, then I am here to share them with you. Number 1. Stocks have existed for a while. To begin with, stocks have existed for a lot longer than you probably realize. If you define a stock market as a controlled marketplace where people can buy and sell investments, you may date it back to the 11th century in France when agriculture debts were traded, and the 16th century in Belgium when a more complex debt market was present. The Dutch East India Company, which was established in 1602 and engaged in trading in and between Asia and Europe, appears to have had the first publicly traded stock. The Amsterdam Stock Exchange was where its shares were traded. The New York Stock Exchange was founded by 24 gentlemen under a buttonwood tree in the area of New York City that would eventually become Wall Street in 1792. Making this the oldest exchange in the United States. The stock market is frequently perceived as being contemporary. The majority of individuals who would cite a commencement date of roughly 100 years ago. However, the stock market is actually quite old. In the Netherlands, the concept of the stock market was first proposed in 1602. Initiated the issuance of paper shares by the Dutch East India Company. These paper shares were tradable by shareholders. This business introduced the idea of a stock market. As a result, the Amsterdam Stock Exchange, the oldest stock exchange, was founded. It's now referred to as the Euronext Stock Exchange. Number 2. 70% of the time, the stock market will increase. The stock market is more likely to rise than fall in any given year. For instance, the Dow Jones Industrial Average (DJIA) has increased 70% of the time over the past 100 years. Additionally, the Standard & Poor's 500 (S&P 500) has increased 77% of the time over the past 40 years. This distinction is highly important. This is only historical information, of course, but this has been happening for a century. It's likely that this will continue. One of the reasons dollar cost averaging (DCA) is a bad idea is because of this. In fact, DCA is making a bet that the market will decline. However, the stock market is not capable of doing so. Number 3. The most turbulent month in October. In the stock market, there is a myth about the month of October. Even a phenomenon known as October effect exists. People believe that October is when the stock market declines the most compared to other months. In October, there were 2 significant crashes. Both the crash of 1987 and the Great Crash of 1929 occurred in October. However, this effect is not significant when we look at statistics over a lengthy period of time. October saw more bear markets coming to an end than in beginning. This information makes it more fascinating, and because these 2 accidents are so ancient, most people will overlook them. These arguments have led to a decline in the October effect's popularity. Data, however, indicates that October is the stock market's most volatile month. October has more significant movements in the stock market than any other months, so be prepared for some significant volatility in October. Number 4. The worst month is September. We've just learned that many people regard the October effect to be true. On the similar note, September is the stock market's weakest month. The Dow Jones Industrial Average (DJIA) has decreased by 0.8% year on average since 1950. The Standard & Poor's 500 index also experienced a 0.5% fall during that time. Comparing this reduction to all other months, it is noticeably less. We don't understand why this occurs. It's possible that a decline will result from some people cashing their refunds at the end of the summer. One such explanation would be that some traders take holidays in August, and when they return, they sell part of their positions in order to receive their payouts. This resulted in a drop and some selling pressure, but these are merely conjectures. The September effect is only another abnormality in general. Should you sell everything now in order to make September? Of course not. I say, simply an average over many years, this outcome. Future events may well cause it to change. Based on such averages, market timing should not be practiced. Number 5. 40% of the global stock market is made in the United States. With 60 stock market exchanges, the global stock market is huge, but by far the largest stock market is that of the United States. The American stock market accounts for 40% of the global stock market as of 2018. It accounts for a lot more than the second largest stock market contributor, Japan, which contributes 7.59%. The fact that one nation dominates the stock market in terms of revenue is pretty astounding. As of August 2018, the stock markets of the 5 largest countries are: number 1, United States, 40.1%. Number 2, China, 7.51%. Number 3, Japan, 7.59%. 6.5% from Hong Kong. 5, United Kingdom, 4.49%. For those who are curious, Switzerland makes up 2.1% of the global stock market. Not that awful, really. Number 6. The first investment book was published in 1688. The stock market's age may have already caught you off guard, but the first investing book's age may have shocked you even more. Confusion of Confusions by Joseph de la Vega is the first book about investing. It is a book in Spanish on speculation and investment. The 4 laws of conjuncture in the book, which are most well known, are: number 1, never give stock recommendations to others or urge them to buy or sell shares. Number 2, acknowledge both your successes and your mistakes. You will lose some money when you speculate, so be ready for it. Number 3, stock market gains are ghoulish gold. Profit can sometimes be very high, at times it's incredibly low. Number 4, a person who wants to become wealthy needs both money and patience. Amazingly, a book from more than 300 years ago still has a lot to say about the stock market today. Number 7. Up until 2001, shares were exchanged in fractions. This fact is astounding. Prior to 2001, fractions were commonly used to price shares on stock exchanges, including those in the United States. A share would cost you $1.31, 16 USD, still unable to comprehend why they took so long to implement a decent decimal system. Spanish money is where the concept of fractional shares originated. Spanish currency consisted of gold doubloons. Furthermore, these doubloons were divisible into 2, 4, and 8 pieces. Why 8? They wanted to be so numerous that people could count them on their fingers. Additionally, thumbs were not considered to be fingers back then for whatever reason. This mechanism was in use when the New York Stock Exchange first opened. Realizing that the lowest price difference was 12.5 cents is crucial. Therefore, 12.5 cents could only be the lowest spread. This lowest spread was eventually found to be too large, so they decided to add $1/16, 6.25 cents, to the system. However, they later switched to a genuine decimal system in 2001. Therefore, today's smallest spread is 1 cent. Number 8. In 1720, there was the first stock market bubble. The dot-com bubble of 2001 is typically regarded as the first stock market bubble. Perhaps some people would even consider the Great Recession of 2009 at this point. I guess the Great Depression of 1929 is the first thing that comes to mind. The first stock market bubble, however, was actually observed in 1720. The South Sea Bubble is the name given to it. A very successful trading firm in the UK was called the South Sea Company. Since the king was the company's ruler, the people had faith in it. In 1720, the South Sea Company took up a portion of the state debt. They also launched a marketing campaign to boost the share price. The share price was soon rose as a result. The cost had increased from 100 GBP to more over 1,000 GBP by the end of August 1720. A surge of less than a year. Everyone aspired to participate. Many started selling heavily at the top in order to increase their profits. This huge sale rapidly caused the price to decrease. The price had rebounded to 100 GBP by year's end. This decline led to several failures and bankruptcy. Additionally, during the bubble, numerous British investors suffered total losses. Number 9. The name of the New York Stock Exchange has not always been the same. Every stock market investor is familiar with the New York Stock Exchange, though it wasn't always called that. NYSE. The NYSE is the largest and most well-known stock exchange on Earth, but relatively few people are aware that it once went by another name. It went by a different name for more than 70 years. The Buttonwood Agreement was drafted and signed in 1792 by a group of traders. As a result of this arrangement, the New York Stock and Exchange Board was established. The New York Stock Exchange became the official name in 1863. It's also referred to as the Big Board at times. Number 10. One individual utilized the stock market to comprehend the American hydrogen bomb. This fact is extremely cool. What connection exists between the stock market and the hydrogen bomb? Not much, although you can learn a little about it by studying stock market valuations. The United States studied the hydrogen bomb in the 1950s, or thermonuclear bomb. It wasn't against the law for physics to disclose the fuel they utilized. However, a lot of people were interested in it. They use lithium as fuel. As founded by economist Armin Alchian, he saw that the stock price of Lithium Corp dramatically decreased throughout the testing. During the initial year of the trial, this company experienced a return of 461%. An attempt to publicize his findings, Armin Alchian, but due to national security concerns, it was prohibited by the government. He wasn't able to post it till much later. This is the stock market fact that startled me the most out of all of them. This ends the video for today. Which fact did you like the most? Share with us in the comments section. Hope you got to learn from this video. If you did, like this video and subscribe to our channel to watch more knowledgeable videos like this.